Good morning. This is Brandon from Galaxy Stock Market. It is approximately 10:15 a.m. Eastern Standard Time, August 16th, 2025, Saturday. And I'm bringing you my weekly market analysis. And the title is, as the slide shows, Trading the Dog Days of Summer Weekly Stock Market Analysis. So let's get right into it. All right, so here's the disclaimer. Please pause it, read it. If you agree, please move forward. And of course, follow us on x.com/galaxy.market. I'll commentate on various geopolitical, economic, and anything that's pertinent that helps us to trade. There is some opinions placed on there, but it's a great place to find out real live what I think is important to help us trade. All right, so the biggest news is that, everybody was guessing about what was going to happen. It was pretty much a nothing burger. But Trump and Putin met for about 3 to 4 hours in Alaska yesterday. And everybody is conjecturing, is there going to be peace? And you always have to pray for peace. What's happening in Ukraine and Russia is a travesty. And let's see what develops. However, this highly vaunted August 15th meeting between President Trump and Vladimir Putin in Alaska was pretty much a nothing burger. We'll see what develops out of it, but that is that. Now, let's get right into what we're going to be talking about. And the premise of my macroeconomic indication and analysis is always going to be on US dollar and 10-year yield. So what's going on with the US dollar and the 10-year yield? Here's the situation. US dollar continues to have show weakness. It is weakening. We have lost the $98 level, which is right here. That's what I've been saying. If we lose that $98, it's going to be very, very difficult to change the course of where the economic situation is headed. Folks, we are headed into a recession despite what President Trump is saying, and despite all of these interventions, and maybe he can pull it off, and I'm praying for it. But the fact of the matter is we have to go with our indicators that do not lie. A lot of the government reports like PPI, CPI, jobless claims, they're all manufactured numbers, okay? They keep revising those up and down, and you really can't trust it. It's just that the stock market, about 95% of the entire stock market is now traded through computer algorithmic trading systems, and they react to those. Regardless, and as the title of my video suggests, that we are trading in the dog days of summer. And historically and seasonally, this is a slow grind and melty market action that has always been there. But we are now coming to the end of the dog days of summer. I think the summer ends in, September 22nd. And historically, we are also entering into seasonality. This middle to end of August tends to have some trend changes and volatilities that will spike. So why do I talk about the dollar? Well, what does that have to do with anything? Well, on August 1st, there was an intervention to bring up the US dollar from 97.109. And you really want to look at this level, and that's a key level. If we start losing this 97.109, there's going to be a lot of problems in the stock market, in the geopolitical arena, and probably global economic markets. Remember this, US dollar is really lost its prestige, and it is no longer the reserve currency for trading. It's no longer the petrodollars because the Saudis have not renewed the petrodollar agreement that was enacted under Nixon or Henry Kissinger. And so the fact of the matter is we have a declining U.S. dollar situation. And really, in order for United States economy and the world economy to really show that we're coming out of recession, even though no one's admitting to it, is that the U.S. dollar has to be strong. But there are things that are happening that basically shows that that's to the contrary, and that is not absolutely what is happening. When you couple that with the 10-year yield, which is a measure, TNX is a measure right here. TNX is a measure of 10-year U.S. Treasury yield, and this is kind of the benchmark for all of interest rate decisions, and also it's a benchmark for how well the economy and the United States debt demand is going. Remember, we are a debtor nation. No matter if we say we are the richest nation in the world, we are also the biggest debtor nation in the world. And the amount of debt that we've accumulated, I think we're going on 38 trillion now, is astronomical. And every time that under this fiat money system, we start printing money out of thin air, this is what Federal Reserve Bank is doing. And again, don't get me started on that. It's beyond the scope. I don't like the Fed. I don't think there's any use for them. Okay, there, I said it. Here's the thing, though. The 10-year yield is really the vehicle of choice for the Federal Reserve Bank. And so here's the problem. Federal Reserve Bank is going to do everything they can to try to prop up the 10-year Treasury bond. Now, you have to understand that the yield as it rises means that the value of the 10-year bond is going down or there's no demand. And, they've been trying to get this thing below 41.88. I've been saying for a long time that really for Fed to really have people believe that, their policies are working, they're great stewards of the economic and employment situation in the United States and abroad, is that they need to get this thing below 36.50 for them to have any type of credibility and to perpetuate whatever agenda that they have. Okay. The problem is that despite the fact that Fed is issuing bonds, but there's no subscribers, meaning that there's no demand for them. So they're buying back the very debt that they issued, and they're buying it back with printed money. And therefore, no matter how much that they buy back at this point, the yield is going to continue to rise. And I think in my group, I've been harping on the fact that if we get above this 43, that is an indication that something is very, very drastically wrong. And as this yield continues to rise, and I've done some posts about the banks. Banks are not well, folks. Despite the fact that they are going higher because of all this excess liquidity that's sloshing around from the printed money, they are being manipulated and basically being propped up by the central banks. Okay, but this is cluing you in that, hey, despite all that, here, it's telling you in plain daylight that something is drastically broken. And this is why we have all of these problems with tariffs, Trump going tariffs. And I've always said President Trump is preparing the United States for a bankruptcy. We're going to have to default on this debt one way or the other. It may not be coming out and saying that they're declaring bankruptcy or that we're going to default on these debts. They will do it one way or the other. There's various theories about it, right? You've heard about the gold revaluation, currently at $42. If they even revalue the gold to the current spot price, yeah, that would change the equation very, very quickly. There's theories about crypto reserves, and the Bitcoin people are going nuts right now because of the fact that Trump said that they will not, or Bessent actually, will not be actively buying Bitcoin, but they will be using and building up the reserves in Bitcoin from confiscated asset. Think about that. Confiscated. From where are they confiscating this from? Okay. Now, that's beyond the scope of what we're talking about. But for me, the 10-year yield really needs to be looked at, and we are in danger zone, folks, okay, despite the market going higher. And I think it's going to continue to chug a little bit higher, but we're also coming into that seasonality towards the end of August, beginning of September. August, September, and October tends to be a very volatile month, and really a lot of the stock market crashes occur in October. So we're setting the stage. We're at all-time highs. We're going to go over some of those technicals right now, but I want to talk about gold and silver going forward. Okay. Before we do that, one thing that I want to drive home is that Fed will try to sacrifice the stock market right here to save the 10-year bond. Despite massive interventions, yield continues to rise, and that's what I've been saying for now, right? So here's the problem. The saving of the 10-year yield or the 10-year bond cannot come at the cost of the U.S. dollar. That is absolutely the problem, and therein lies the paradox. Okay, we have the U.S. dollar coming down while the 10-year yield rising. Okay, this is a big problem. Okay, we want the dollar to rise and the yield to come down, which means that there's demand for our debt. Just keep that relationship in mind. So here's a graphical representation right here. It's coming down and the 10-year yield is rising. That's a big, big problem. So let's talk about gold and silver, shall we? There has been unprecedented paper shorts that are going on. Usually it was like every week, maybe a couple of weeks, or at critical levels, maybe once a month, and they would slam down the prices, especially on silver. They can slam it down. But really, if you really look at it, given the amount of, they're slamming, every time that they're slamming these down, it's about 200 to 280 million ounces of silver and gold for that matter. And all they could achieve is really like a $3 decline. Really, this low is the critical level. These support levels that I've drawn out are levels at which there's going to be just buyers just sitting there that demands physicals to be delivered to them. And people really aren't selling the physicals, right? And so it's very, very hard to manipulate at the derivative level of these silver market levels. And we're basically holding at these levels. And the problem is that, the more that they paper short or naked short these silver and gold positions, right? These are artificial. They don't exist. They can't deliver those. Eventually, it's going to set up for an serious, epic gnashing of the teeth moment right here. That's what's going to be coming. Okay. So, again, it's unprecedented paper shorts that are continuing, but the price slams are not occurring anymore. They're very, very short. And basically, it's like a drug addict taking bigger and bigger hits of that drug until their heart stops. And that's what's coming next. And it will be epic. So I want to go over really quick before we go into our technical analysis, is that about 2 weeks ago at that last video that I made, and for the last 8 months, we've been trading off and on United Healthcare on the short side, because clearly our indication and analysis showed that that United Healthcare was in trouble, and this is our crush indicators basically giving us clear sell signals. And so and this is just an example. I think this was in our previous videos, and we made a ton of money shorting at least 25x on each of those subsequent ride down. And I call United the gift that keeps on giving. And then we shifted gears as we noticed that all of our internals were flashing buy signals. So, and in the Twitter space, everybody's talking about how anyone that was short have switched to buying, and we did the same thing. We didn't know that these guys were doing that, but this is after the fact. This was about 29 minutes ago. And I just wanted to show you kind of the type of analysis that goes on in our group. So right now, United is undergoing mother of all short squeezes, and and that short squeeze will continue, folks. Okay, and United is a gift that keeps on giving, both up and down. And so this is about 3 days ago, and I was reminding people, hey, look. Of course, I had to block these up. These are active trades. It's not fair to our members for you guys to be seeing it. But XRP, that's something at these levels you guys should be buying, but not financial advice. But United Healthcare calls, and I was reminding our group, and this is our new, by the way, new platform, community platform. It's really cool, and consider joining us if you kind of want these type of analyses. But this is in our elite group, and so this is a higher tier group. We get, basically what I'm doing, what I think should be a good entry and exits, what stocks and what puts and calls that we're going to be buying. But remember, a lot of people think I just buy puts. I do not. Okay, United Healthcare calls were made on 8/22 for 275 strikes. And I said, if you missed it, that was 3 days ago this week. Okay. So if you missed it, I said, you need to get in at the market open. And boy, did it ever take off when the news broke, right? We don't know what news is coming, and we're not really trading on news driven things, but based on our technicals, order flows, just the pivots, and the good old stock market technical analysis that I've gained over the last 32 years. But this is the gift that keeps on giving. These are our active trades, and so about 4 days ago, and I basically made that call out, and I told everybody in our group, we're targeting 299 to 309.55, and we absolutely hit those numbers. Those are our first numbers, and then I'm going to show you the technical analysis, and you make your own decisions about it. I said average initial position should be $1.38 for the August 22nd expiration, and so that's what we paid. Okay, so you can just, for those of you that are options traders, you know that this is significant, and we do this all the time in our group. Okay, um, so when we called this out, and then I'll go into technical analysis. Okay, we started to enter right into here, right off of that green line, which is the ADMA, and they basically were showing bullish signals, and we started to see an uptick in the buying volume. It just since those massive sell-offs. And the great thing about United Healthcare is that these gaps were achieved in succession within 3 months of each other. And I always have a rule that says fast in, fast out. We took full advantage of that. And so I'm going to give you these because this is where I think our levels are going to be. And this week we kind of hit these levels right here. Okay, above there. Okay, so next week is going to be a doozy. We got the 100-day moving average, 200-day moving average, and these gaps right here. Okay, that should be sufficient. We have a MACD crossover, bullish histogram setup. Okay, this is from August Friday. I just mocked these up for our group, and I think I posted this also on Twitter. Okay, so let's move on. So we've talked about this. We just went through it, exactly where the United Healthcare closed. So, folks, this thing has legs. We gapped up higher, and I believe we're going to start pushing up towards these 100-day moving average and the 200-day moving average. We're basically increasing in our velocity on the RSI, and we're moving higher. We got the MACD that basically is signaling that we are going to start moving higher from these oversold levels. Okay, and so our commodity channel index still has some legs. I know commodity channel index can be contrarian at extremes. We're not even anywhere near there, and we broke out on the stochastics. It's very directional. Like I said, this will continue to go, at least cover that first level of the gap on this chart. Our PPO-ADX, this is the crush indicator that I talk about, gave us a perfect signal for entry into the long position. And then, of course, accumulation distribution broke the downtrend line. We're moving higher. This is Buffett and on the rest of us getting in right now. And most people are still bearish on United Healthcare stocks. And, a lot of the shorts are going to continue short on the way up. And that is going to be a big mistake. And they'll serve as a fuel for fire as the stock moves higher. And ATR, I use this as an indicator for a trend change. And as this increases, the price, the average true range price movement will increase as we go. So that's United Healthcare. Let's go into SPY, where we are. And I've said that we're in the dog days of summer towards the end, and end of August, September, and October tends to be seasonally a volatile month. And guess what? We are right up at that long-term trend line on the SPY. This is what I'm talking about. Okay, it could overshoot. However, touching or breaching briefly those levels will lead to significant sell-offs. We did have a little bit of a market rescue right here, and I believe that's coming to an end. And let me show you why I think that is the case. Okay, so it's SPY. This is the weekly SPY chart, and basically you're familiar with these. We're running right smack dab into here. We can go as high as here. We have RSI that's beginning to kind of flatten out right now at this point. Like I said, it can move a little bit higher over the next week. However, the momentum is waning. The volume is coming down. We have the MACD histogram coming down. It's still very, very bullish and directional at this point. However, we got to pay attention to those histograms. They are early warning signals. And our commodity channel index is basically negatively diverging. We have the stochastics that's now beginning to turn over, and the price movement is coming down. We're nearing that top of that end of that range of that move. On the PPO ADX, we're still kind of direction of beginning to kind of form this negative formation. When we see something like this, that is bearish on the PPO ADX. It's a very simple indicator to use, but it's hard to kind of interpret. We are continuing to move higher on the accumulation distribution, but we're near at the top end of the range. And realistically on the ATR, we're declining in the average range of that price movement. And so, we're anticipating some form of, trend change coming up, but not right now. I mean, we got to be patient about this. Here's the daily. Are we forming a double top, or do we go up a little bit higher? We have negative divergences forming, negative divergences on the volume, although denoted by these arrows. The sell side volume is beginning to creep up higher. We've got MACD histogram showing negative divergence here. We've got flattening of that curve. CCI on the daily is also negatively divergent, and so we have the stochastic forming a death cross at this point, and our PPO ADX on the daily possibly forming that same type of a bearish formation. On the daily, we're beginning to see accumulation distribution possibly breaking below here. Break of this trend line is going to signal to me that maybe we should start looking to add some protection, or start looking to short the market. We talked about OKLO, and I continue, and this is one of the stocks that we're looking at. Double top formation, negative divergence, declining volume after it's gone basically parabolic higher. MACD is coming in on the bearish side, and of course the histogram, double top and coming in. CCI coming down, negatively divergent. Stochastics has turned over. We have positions on these, folks. PPO ADX crush indicator coming down, accumulation distribution from top to bottom. If we cross this line, it's game over. Okay, and so we're bearish on that. WYNN continuing to form what some might think that this is a bullish flag, but this is what churning stock looks like on the weekly. Churning. Can't get over this, top end of the range. I mean, this is really forming that double top formation. Okay. Declining MACD. So that's basically what we got here. And then SMCI, obviously, SMCI seems to be forming a nice, after topping out. I said we broke out of this wedge. Okay. Still bearish on this guy. All right. We already talked about United Healthcare. One thing I do want to talk about really quickly. Here we go. And you got to do these top-down S&P 500 sector analysis, and we're going to go over all of them and why it's, I think, showing a topping pattern. Basically, everything is stalling out. We're getting these bearish candle formations, reversal candles all across. Even in technology, we have that black candle, and basically, we've been coming down. Okay, here's a kind of a bear flag formation. We topped out, making lower highs, double top, lower highs, double top, lower highs, and a reversal candle, double top. Okay, you get the gist. Okay, just pause it and watch this. And this is cluing you on. I'm not saying go out and short everything, but this is telling you that there is a volatility that's going to come, that everybody's so bullish right now, don't know their head from their asses. Okay, so that's what we're talking about. XRP. Okay, don't be this guy. Don't be these people. Right now, you have an opportunity to pick up XRP. It's pulled back from the highs of 365, but now everybody's getting the FUD going, and XRP is the basically the payment system and liquidity provider. It will be the digital reserve currency. Okay, well, we talked about this at that last video. I said, are you going to be buying here? And, it's still giving you the chance to go in. We're at $3.10. Okay, it's cheap all the way to 10. Okay, so it's still at a buy point. Why are you not buying? Are you busy buying Bitcoin? Well, I mean, or you don't believe in crypto? Well, that's fine. That's on you. Okay, so that's it for us. And that's kind of in a nutshell what we're looking at. Follow me at Galaxy.market. If you're still following me on YouTube, please like and subscribe and comment, good and negative. I mean, I know what I'm talking about is controversial, but I enjoy the dialogue. If you want to work with me, you got to email me at coachbrandon@protonmail.com. We have a whole brand new community site formed up. And a lot of you might say that some of my higher tiers are expensive, but here is what I have going right now. So if you click on either YouTube or the x.com description, and I've formed the Galaxy Essentials membership, and so you're going to get all the market commentaries, all the pivot levels for those of you that are trading at SPY and ES, and any of the breaking news, weekly watch lists, and I'll kind of accentuate what we're doing at the higher tier level, Elite Plus, and the institutional groups. Okay, $49.95 a month. Or $490 per year. It'll be well worth your money. I'm trying to grow this kind of the basic level, and for most people, that's all you need. And I made it very easy for you to check it out. Okay. No, I don't have any trials because I want serious traders to join me at this point, and I think the results speak for itself. But I would love it and be honored if you want to consider joining me. This is how you do it. Okay. Otherwise, let's get some alpha. Bye-bye.